Since the dawn of time, stories of greed, power, and human folly have shaped the world. But few stories are as chilling, as captivating, as the tale of the 2008 financial crisis, a moment in history when the world was brought to its knees by an empire built on illusions. Picture Manhattan in the mid-2000s, the financial heart of the world, where dreams were made and fortunes were lost in the blink of an eye. In the grand offices of Wall Street, the air was thick with confidence, the champagne flowed freely, and the men in tailored suits were the modern-day titans, riding high on the wave of a booming housing market. It was a time of euphoria. The housing market was on fire and everyone wanted in. Banks, with their insatiable appetite for profit, were all too eager to lend. They handed out mortgages like candy on Halloween, offering loans to anyone with a pulse. The American dream was within reach for millions as families, fueled by hope, signed their names on dotted lines, believing they had secured a piece of paradise. But beneath this frenzy lay a dark truth. These loans were not the safe bets they appeared to be. They were called subprime, mortgages given to borrowers with shaky credit, little to no income verification, and often without even a down payment. These loans were a gamble, and the stakes were high. Borrowers were enticed by low introductory interest rates, only to face steep increases later. Many of these loans were adjustable-rate mortgages, meaning that after a few years, the interest rate, and thus the monthly payment, could skyrocket, leaving homeowners unable to pay. Lenders didn't care if borrowers could truly afford the loans because they quickly bundled these risky mortgages into securities and sold them off to investors. This process, known as securitization, spread the risk far and wide, embedding it deep within the global financial system. In boardrooms across Wall Street, the executives reveled in their success. They believed they had outsmarted the system, turning lead into gold. The demand for these securities was insatiable, and to keep up, the lenders lowered their standards even further. They gave loans to people who could barely afford the interest, let alone the principal. The financial world was on a high, betting on the idea that housing prices would never fall. But no bubble can float forever. By 2007, the first cracks began to appear. Housing prices started to wobble, then drop. Those who had taken out risky loans suddenly found themselves drowning, unable to make their payments. The floodgates opened and foreclosures surged. The value of mortgage-backed securities, those supposedly safe investments, plummeted. What was once gold turned to toxic sludge, spreading like a plague through the global financial system. Panic gripped Wall Street. The once confident traders, those masters of the universe, now scrambled in chaos. Lehman Brothers, a giant of finance with a legacy stretching back over a century, was the first to fall. Its bankruptcy sent shockwaves through the system, triggering a domino effect that brought the global economy to the brink of collapse. Around the world, markets crashed. People lined up outside banks, desperate to withdraw their life savings. Fear hung in the air like a dense fog, choking the life out of the global economy. Governments, faced with the prospect of total collapse, stepped in with massive bailouts, injecting trillions of dollars into the financial system to keep it from unraveling completely. But the damage was done. The world had changed, and the scars of the 2008 crisis would run deep. So, what can we learn from this tale of greed and destruction? How can you, the listener, recognize the signs of an impending financial crisis, and more importantly, how can you not just survive, but thrive when the next one inevitably arrives? Financial crises often follow a pattern. The first sign is usually an asset bubble, whether it's housing, stocks, or something else. Prices start to rise rapidly, driven more by speculation than by real value. When everyone around you believes that prices will keep going up forever, that's when you should be on high alert. Next, watch for excessive risk-taking. Are banks and investors making increasingly risky bets, driven by greed and the belief that they're invincible? Are lenders handing out money like it's free, giving credit to those who can barely afford to pay it back? These are the warning signs that trouble is brewing, that the house of cards is about to collapse. And when the bubble bursts, as it always does, panic sets in. Prices crash, and those who were overleveraged, the ones who took on too much debt, are forced to sell at a loss, creating a downward spiral. But here's where the opportunity lies. In times of crisis, fortunes are made by those who can keep their heads while others are losing theirs. The key is to be prepared. Hold on to cash or liquid assets so that when prices hit rock bottom, you're ready to buy. Focus on the fundamentals, invest in companies with strong balance sheets and solid business models that can weather the storm. And above all, don't follow the herd. When others are selling in fear, that's when you should be looking for opportunities. Remember, financial crises are a part of the economic cycle. They can be devastating, but they also reset the playing field, creating opportunities for those who are prepared. Learn from the past, stay vigilant, and when the next crisis comes, be ready to seize the moment. The story of the 2008 financial crisis is a cautionary tale, but it's also one of opportunity. In every collapse, there is the seed of a new beginning. The question is, will you be ready to plant it?